Well, our next guest has very strong ties to LinkedIn. Mark Kvamme is a special limited partner at Sequoia Capital, one of LinkedIn's early investors. In fact, when Sequoia first invested in the company in 2003, it was valued at just $15 million. Kvamme was the LinkedIn director from November 2003 until the start of this year. And he was at the New York Stock Exchange today for the company's debut on the big board. He joins us now from Columbus, Ohio. Mark, thanks for your time. What was going through your mind when this thing started trading today? And you were there with Reid Hoffman. What did you think after that stock started surging?
Well, it's a great testament to Reid's perseverance and vision. I mean, he had the vision over 8 years ago to build a professional network. In fact, I looked back at some of my emails from 2003 and actually remembered seeing I looked at the first presentation he gave me on where he wanted to take LinkedIn. And I got to tell you, this guy was spot on. About 90% of what he said he was going to do, he did. And at that time, as we just mentioned, the company was valued around $15 million. When you were on the board, even in the lead up to this, let's say over the last year, did you think by the end of the first trading day, this company would be valued in the market at $9 billion? At one point today, $11.5 billion? What happens on the first day? I always look at the IPO as a new beginning. What's going to happen on the IPO? You never really know. The one thing I know is that LinkedIn has kept the same vision over a long period of time, and I think over the next coming years, you're going to see some great things from the company.
Hey, Mark, let me ask you about what you saw in this company back then and lessons learned so you can try to find the next LinkedIn, because that's part of the story of Silicon Valley, is always looking ahead, trying to find the next great deal.
Well, I don't know if you remember a company called Friendster, but Friendster was the first real social network. Well, Friendster and LinkedIn were in the same building. Friendster was on the first floor, LinkedIn was in the second floor, and we were actually looking at both companies. And I remember sitting in the parking lot with Mike Moritz going, which is the right one? Where should we go? And what we really liked was Reid Hoffman's vision. We also worked with Reid at PayPal. Mike was on the board of PayPal. And so we really were able to sit down and got very comfortable where he was going to take it and really understand how this is something that in the future could be a great tool for corporations. And if it's a great tool for corporations and individuals, you can make money off of it.
Yeah, I'm going to guess the kind of cars that are in the parking lot at LinkedIn are going to change in the next few days.
Yeah, no, I would assume so.
Hey, Mark, we know that some investors in LinkedIn sold as part of the IPO, like Goldman Sachs. Sequoia Capital still owns a lot of stock. How does that work? How was it decided which of the earlier investors would be selling as part of the IPO and why Sequoia is still such a big stakeholder?
Well, we've been fortunate to work with some phenomenal entrepreneurs over the years, and our whole philosophy is we want to build, as we like to call, aircraft carrier companies. Companies that are going to stand the test of time, and we believe that LinkedIn is one of those companies, and we think it is in the best interest of our limited partners to see what to hold this company, the stock, for a while. Many of our companies, we'll see what happens with LinkedIn, but many companies we've had a 10x return after the IPO. Because they've, companies like Cisco or companies like Electronic Arts and others. So, we really believe in this company and very encouraged about the future of the company. And we think it's in the best interest of our limited partners to keep moving forward.
Mark, a lot has been made about the price at which LinkedIn went public today. 45, traded at 120, settled just below 100. What happened? Why was so much money, if you will, left on the table? How did that all work out?
I mean, it is not an exact science. I mean, as you know, the initial filing range was in the 30s, and then, it was upped into the 40s. You never really know what's going to happen. And the key thing you want to do is ensure that you set the best price you can at the time you can. And then I think as I was watching them trying to price it, the first 30, 40 minutes out of the open, they were having a difficult time finding enough sellers. So I mean, all today proved was that there were a ton more buyers than sellers, if you will. What will really be seen is over the long period of time, what happens. I mean, this is just one very singular short moment in time.
Mark, I'm curious about your choice of investment banks for this. There used to be all this local venture capital support for local investment banks, so that supported the Montgomerys and Hamburg and Quist and Alex Browns of the world, Robertson Stevens. those banks aren't getting these kinds of deals. Those banks don't exist anymore. But the local banks, the local banks that have supported technology in the past, aren't getting those deals, in part because I think venture capitalists like you haven't pushed for that. Is that what's happening behind the scenes? Why are you giving these deals to New York banks like J.P. Morgan and the like?
Well, I mean, I think you got to remember, I mean, times have changed over the last 10 or 12 years. You know, 15 years ago when I took my company public, CKS Group, there were very few, if you will, New York banks that had, you know, significant operations in the Silicon Valley. Almost all major banks now have major operations there because of the value of the technology companies. So you have local people who really understand your businesses. Yeah, they may have a moniker of you know, their headquarters may be in New York, but the folks, the bankers that we worked with at Morgan Stanley and J.P. Morgan and B of A, I mean Merrill Lynch, they really understand the business and are as much local to Silicon Valley as they are to New York.
Yeah, but these guys, some of these guys also closed their offices on Sand Hill Road after the bubble burst, and you know, the carpetbaggers went on back east. You just went back to Ohio. Maybe I shouldn't be saying that. That's not really back east.
Exactly,
That's just halfway
there. Yeah, I'm halfway there. No, no, it's interesting. I mean, most of the guys that we worked with, and I mean, I got to tell you, all the banks were very impressive, and they did a fabulous job. You know, we've worked with many of them in the past, and it's you know, I think what they're seeing also is you're going to see a lot of things happen in Silicon Valley. I mean, I've grown up in Silicon Valley, and I've lived there for 50 years. I mean, my first time out is just the last 4 months here in Ohio. And, you know, Silicon Valley goes in waves. I can remember that, you know, the semiconductor wave, and then the PC wave, then the PC software wave, then the internet wave. Then, you know, it just goes in these waves. And a lot of these guys, you know, have now understood that after being there for a while. And, you know, they've had the fortitude to stick it out.
Mark, very quickly before we go, is LinkedIn worth $9 billion?
You know, from my perspective, I think you can only ask that over time. And the company has got a phenomenal vision, an incredible management team, and we'll just see. I mean, it is one of those things that this is one specific moment in time, and we'll have to see what happens over the next coming years.
Mark, good of you to join us after flying back from New York, where you're at the exchange today. Mark Kvamme of Sequoia Capital with his perspectives on the LinkedIn IPO.